Good morning, folks. It is Tuesday, February 28th. It is early in the morning. The equity markets have yet to open. Some nice action in the precious metals, and I want to look at four charts this morning. So here we have gold in the daily time frame. We've got this Fibonacci retracement tool, and so we're looking at this rally from, what was that? That was November up into this peak. And now the retracement here, the pullback correction, we use the Fibonacci retracement tool. And what I notice here is that we get a strong reaction at the 38% level. And then we get another, we didn't get a bounce, but at the 50% retracement level, price paused there and did this kind of sideways consolidation. And then we got some more decline last week, which that didn't feel good. I thought we had bottomed. I thought that bullish hammer there, I think I even mentioned last update that could be a bullish hammer. And so it didn't feel good to continue declining last week. But now here we are at the 62% retracement level, and price again appears to be finding support at that level. So doesn't mean that we're going to get, price is going to turn around and head back up at this point, but it is encouraging to see price at a potential support level and appears to be finding support there. So we'll watch that, see how it goes. MACD histograms, kind of hinting that momentum might be turning back up. And of course, MACD has worked off its overbought. Up here we were overbought in MACD. We're not oversold in MACD, but we're certainly not overbought anymore. So anyway, another reason that an upturn could happen at this point. Just a note on Fibonacci retracement. The 50% level, that's not a fib level. That's not a Fibonacci level. 50% retracement comes from Dow theory, where 50%, that's the Dow theory, they look at 50% as the, if we bounce above 50%, we're still in a bull market, assuming, price trend is upwards. And if we drop below 50, we're in a bear market, or price is going to continue heading lower. But most of the Fibonacci retracement tools include the 50%. So that's just geeky information if you're into technical analysis. So silver in the daily time frame, I hadn't looked at the fib retracement here, but again, we've got price apparently finding support at this horizontal support resistance level. And so we can see that, here it is, support, one bar of support fails, and then we start testing that level from below, testing it as resistance. And so, resistance, a little bit of an overthrow, again, resistance, overthrow, and then finally a breakthrough, and now we're back testing that level for support. So not a strong support level, but it is a potential support level there. And of course, not positive that we've dropped below the 200-day moving average. Although I have to acknowledge, and God, I don't even like doing this, in today's markets, there are so many people with large pools of capital, they're able to push the markets around briefly, not long term, but on a day-to-day basis, they're able to push the markets in any direction they want to do. And so if you were a big trader and you thought that silver was about to turn higher, you might choose to push it down below an obvious support level and blow out basically run the stops. And so, investors, people that bought up here potentially had their stops set down here, just below the 200-day moving average. And so, as market manipulator, trader with a large pool of capital, you go push price down below the 200-day moving average, you run those stops, and of course you're buying those stopped out positions, and then the market heads higher. And of course it heads higher with your help because now you flip long. But anyway, our markets are interesting these days, I guess we could say. So here we got GDXJ. This is my proxy for the mining stocks. We're in the daily time frame. Nice bounce yesterday from a potential support level. And again, so we've got this horizontal support resistance zone, and I prefer to look at a zone rather than a straight line. Because, you know, when we draw straight lines and expect price to bounce at that line, you know, we're kidding ourselves. You know, it's a little bit sloppy, and then what I was just saying about, you know, the manipulators pushing price around, and so anyway, it's better, at least for me, to look at support and resistance in a zone. And so let's take a quick look. So we see, you know, briefly support. Actually, we didn't bounce there, so you couldn't really call that support. But that's a bullish engulfing. So anyway, price did react at that level. Then we're testing it as resistance, resistance, resistance. Now we've got support, another failure, resistance, resistance, you know, playing at that level, and then a break higher. And now we're pulling back and testing this as a potential support level. And so not a strong support level. You know, this is really, you know, we had some support there. You know, I wouldn't call that support. I was thinking, you know, support with a positive offset. Sometimes when price action is so bullish, it doesn't make it all the way back to the support level on a pullback that you expect. And we sometimes talk about a bullish offset, that, you know, price was really testing this support level, but things are so bullish that it tested it up here. But anyway, appear to be pulling back at least temporarily yesterday, found support at that level and bounced. Of course, we've got the 200-day moving average overhead as resistance. MACD hinting at a turn upwards in momentum. Energy very low, but hinting at a turn upwards. Of course, one of the headwinds that we've been dealing with in the precious metals has been strength in the U.S. dollar, based on a ridiculously strong jobs report. That was, what was that, 2 weeks ago? 8 sigma surprise to the upside. I mean, just pure BS. You see, you see an 8 sigma moves don't happen naturally. And of course, it wasn't a natural move. It was the BLS adjusting, seasonal adjustment. They added some ridiculous number of jobs. And so anyway, one of the reasons the dollar has been strong was that ridiculous jobs report. The idea that I think we had Powell, Fed head Powell out there blowing hot air at the markets about longer for higher, that interest rates are going to remain high and head higher, which is, you know, that's a reason for the dollar to strengthen. So anyway, the positive thing in this chart of the U.S. dollar is this running into resistance and then pulling back, at least briefly. So yesterday, and a continuation this morning. So ran into resistance and so far has not been able to break through that level. So, and we can see here that this horizontal zone has there, here it's resistance, 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 support, 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 play in resistance. Now we're testing it again for resistance, and so far failing. And this is a pretty strong resistance level. I mean, there are several tests, couple of tests there, and here's our latest test. We've got MACD hinting at potentially rolling over, but we have to acknowledge that MACD is in bull mode, which suggests that the primary trend remains upwards. And of course, we're still on a buy signal, and energy is very elevated. So the dollar could easily push up to the 200, at least the 200-day moving average. So this could just be a temporary pause here. I've forgotten to point out in my recent updates this divergence between the price action. So notice that price action is downwards during this time span, but MACD is headed up. And so that divergence, let me scooch the chart over so this is a better look at it. So if this is all we were looking at, we didn't have the action that I just hid. So we got price in a downtrend, but MACD is trending upwards. And so that's a divergence between price and MACD. And sometimes, often enough to pay attention to, the divergence between MACD and price action marks a reversal. And of course, that's exactly what we saw here, is that price reversed and headed higher. So that's all I've got this morning. That's what I'm looking at. Last week didn't feel good to be in the precious metals, but it's looking better this week. So talk to you soon, folks. Bye-bye.